Hello, today is October 28th, 2023. As always, we'll start with our disclaimer, we'll go over our calls, we'll make some predictions. And because it's the weekend, we'll take a look at the longer term picture too. It's my trading plan for Monday. Monday is October 30th. Just remember my calls can be completely wrong and any trade you make should be made at your own risk. Friday's pattern was the pattern with the early high, which is this. Typically it's a rally day. Failure is a straight line drop. I guess you could call this a straight line drop, and usually that leads to lower prices on Monday. The idea gets killed if we gap and promptly overtake this high. Nothing's impossible in a market like this. Here's what we said, and these are the patterns we expect to see next week. Monday should have the early low. The early low doesn't tell us how we open. We could gap up smartly and still have an early low. During the day, MEJT said this drop wouldn't stick, it's retraced, said this rally wouldn't stick, it's retraced. Had this big drop, MEJT doesn't believe it, says we're going to go to 41.2407 unless we gap down smartly. If we don't gap down smartly, that's my call. It's not much higher than we closed. The important thing is, though, that we had this all-day drop and the close was over all these lows. So that means the last 3 hours of trading couldn't maintain a low. And if that's maintained at the open, that's a bullish thing, which conflicts with the fact that this weak pattern should lead to lower prices on Monday. So conflicting indicators usually leads to a gap and a prompt move outside the day's range. The recovery here is particularly significant because it came on a Friday. You're not going to get people interested in fighting the trend of the market on a Friday, particularly on a Friday afternoon. It's very hard to turn these trends around when you're coming into all the illiquidity of the weekend, and the fact that we were able to do it either means this was short covering, in which case we'll just reverse this whole recovery and gap down, or it means that the sellers have used up all their ammunition that they wanted to get out without waiting for the end of the day, and the sellers were gone. We should find out at Monday's open. Well, this is a weekly chart, and this is the last TDST line, 4104.80, there's support at and just under the line, so we dropped right to support. This is the 89-week moving average. Little moves under it don't mean much to me, but if we keep on dropping, it kind of kills the bull case. We're under this Bollinger Band here. That means we're pretty extended on the downside. We get to cross an old target off the list, 4105.24. That's over 5 months old. But look how the market remembers these numbers. It's really an incredible thing. Here's a number for May 24th, and it pretty much identified the low of the day, and it isn't just a target, it's support. So far, we have support from a TDST line, support from the 89-week moving average, support from the MEJT target. This is a trend line here. You ignore this high, connect these. We hit it on the nose, and that's additional support. Then there's the wave count. You can take, we have this as a declining wave and an advancing wave and then a declining wave. If you measure from this high to this low, we're pretty close to 38.2%. In fact, we're about 31.85%. But what's interesting is if you forget this spike up, which is allowed, since this isn't an impulsive wave, you don't have to have the end of the wave hold. If you take that as the end of the wave and ignore the spike up, and you have this and maybe an A and this is a B, C is exactly 38.2%. So that's additional support. This is a system of a friend of mine. I can't really copy other people's stuff, but he has a way of identifying levels which could end the trend. And these three lines, using his system, all hit Friday's low right on the nose. Now, we've been counting this as wave green C down, and this is a 1, 2, 3, but we've been saying there's an alternate count where this move is A and this is B, and we've made an ABC up, and then we should be making a wave C down in this alternate count. So in the alternate count, we have an A, B, C, with C and A having a Fibonacci relationship. Now this count is still alive because we haven't gone past this 4100.51 high, so you still could count this as a 1, 2, 3, and this is wave 4. That still is a valid count. And if you look at this move down, it's possible to count this as an ABC with C equal to 1.618 times A. It hits right there. So that could be the end of the fourth wave without breaking any rules if we stop here. What was I going to show with this one? Oh, this was just showing what I showed before. That if you measure from here to here, you get an ABC with C equal to exactly 38.2% of A. But that's not where the magic happens. Let's look at the magic. Sometimes I get a wave count which gives me a result I find hard to believe, and this is one of those times. We have any number of places on the way down where I could have justified a recovery, and the market just kept on dropping and blown through them. And maybe it'll blow through this one too, in spite of all the support I've shown. But let's look at something that's truly magical. Let's suppose we use the alternate count, with this being A and this being B. And suppose we have this ABC ratio. Suppose wave C of green C ended right here. You can then take the height of green A and the height of green C, if that's right, is exactly to 3 decimal places 78.6% of the height of green A. If this holds, not saying it will, but if this holds, you've got wave balance right at the low on a grand scale, going back to the end of the last century. It's kind of hard to believe that could be the low, but the waves are there. I'm not saying the waves are the only way to count this, but if something happens over the weekend and we recover from here, that's a perfect balance at the low. Still kind of hard to believe, I admit. Signals are mixed. Monday's pattern has the early low regardless of where we open. We drop in a straight line to a major support area. If we're to continue lower without interruption, we need to gap and promptly undercut Friday's low. It is bearish. Friday's normally bullish pattern wasn't. Unless we gap and promptly overtake the day's high, we should see lower prices even if we don't close lower. Such a move higher is not impossible if there's major support, which is shown at Friday's low, and bears couldn't maintain a move under intraday lows, particularly on a Friday. It's just hard to make that recovery. If they were going to continue to new lows, they really should have done it on Friday. It is bullish. There's a higher MEJT target, wave balance at the low, and support at the low of days from multiple unrelated systems. So if we gap up smartly Monday, it could lead to a strong rally. It's just hard for me to believe you've seen the low of this decline, as I'm not seeing the type of divergences I would like to see. However, if we rally enough, we could retest Friday's low without breaking it, and those divergences could develop. It's hard to pick bottoms, especially in markets like this, and especially where gapping down is going to kill the wave count, kill the 89-week moving average, and negate the whole bullish idea. Gapping down is all the pairs have to do, and they have the wind at their back. But if we don't, if instead we gap up, it's very likely we overtake this high. If we gap up, there's every reason to believe this low could hold, even if it gets retested. I'm not going to bet any money on that. We have the pattern with the early low. Let's see how we open. The whole bullish idea could be killed or it could be reinforced. This is a make or break point, and that's today's call.